Bitcoin emergency update. There's a particular chart pattern unfolding where we might see a short-term surge in the Bitcoin price, adding optimism to the market, but short-term. And I'm going to show you why. So if you like today's content, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008. Where I only used to focus on currencies, but now exclusive on cryptocurrencies. So let's dive straight in. All right, markets move in 5s and 3s. If you can count to 5 and you can count to 3, you can read the markets. One of the best ways is Elliott waves. It reads the psychology of the markets. And what we can see over here, I'm going to just make it a bit clearer for you, is a 5-wave movement to the downside. And what I mean by this is this movement here. 1, 2, looks like a 3, 4. And we projected this in advance, saying, look, this is a high probability wave 5, an intermediate or even a micro short-term wave 5 to the downside. The main thing I wanted to cover today was this chart pattern over here. Let me just get rid of these lines, get rid of you. Okay, hunky dory, and then here we go. So this part here, do you see this part here? Now this is one of the very few conditions where we have something called a ending 5th wave diagonal, where the waves are overlapping in a 5-wave structure, and it's the only time it's acceptable to have overlapping waves. And it basically means normally that the sellers are losing power short term, and there's normally going to be an impulsive move to the upside. But we can only do probabilities and never certainties, hence we got this big question mark over here. It's not confirmed. Whereas the price action that will confirm this movement is actually a movement above this high over here. So when the market takes out a former swing high, that gives us an indication that we've met a local low, and then this low should hold. But we haven't had that yet, but this is the highly probable outcome. So what I'm looking for, because if this does occur, we'll probably see some short-term bullish action in a lot of cryptos, because it can be quite explosive, but we want to have the caveat, because one of the greatest things, that the advantages that Elliott wave gives us is the market in a correction or an impulsive wave. So here, by the way, if you're not familiar with Elliott waves, Fibonacci ratios, I'm telling you, you're missing out. Is phenomenal on how to read the markets, because it gives you a massive edge, very, very high probability. So I've created a free Elliott wave and Fibonacci masterclass in the link below. It'll look like this. You'll get instant access, Elliott wave and Fibonacci masterclass, how to read the market like a pro. I cover a lot. It's around 30 minutes thereabouts, but it's really about the 3 key rules that you really, really want to know, and these patterns tend to show up again and again and again. Keep it in mind, everything is difficult before it's easy, so you want to put into practice so you can have an edge on the market. So what I wanted to cover, there's mainly 2 things. What should we anticipate if we do get this surge to the upside? Because of the market structure right now, is unlikely that we're going to go above this former swing high, and we're talking about $47,000, $48,000 Bitcoin. But it's likely we're going to see some type of correction to the upside and then see a movement back down to the downside. That's the most highly probable. So what I would suggest waiting for, what I would wait for, is wait for the momentum to still go further down. When the blue line crosses over the red, that's called a bullish momentum reversal. That will coincide with a potential 5th wave ending diagonal, end of a 5 over 5 over 1. That's the wave counts. I know if you're not familiar with it, don't worry about that too much. Take the masterclass, pause this video. It will kind of cover the basics and come back to this, but it's very, very powerful. So this is the high probability outcome for Bitcoin. Nothing's been invalidated. We've done a couple of videos on Bitcoin. We're just waiting for a swing high to get exceeded. So we haven't had this swing high exceeded. Now this is a new swing high. Now this is the latest swing high. We haven't had that exceeded. When it exceeds, if it exceeds, that will give us the first strong signal that the low should hold before we get a bigger correction. Let me just now give you some standard, these are called Fibonacci retracements. Keep it very, very simple. Simplicity being the ultimate sophistication. And let's look at the typical range we should anticipate for Bitcoin. I cover these ratios in the masterclass. These are the key ratios that you want to be aware of. It's likely that we'll see, if we do take out this swing high, the price zone that we're likely to get to as a minimum is 42,000 and a maximum most common is around $55,000, $56,000 Bitcoin. And again, that can give a lot of short-term optimism. But if this does occur, I'll do an update, because unless this high up here gets exceeded, this is likely to be a correction, and we should anticipate movements to the downside. There's a few other reasons for that as well. I would have covered those in the previous videos. One of the big ones is the weekly momentum is down. So this is what it's looking like. So here, again, I'm going to draw this out. I'll draw this out like this. It looks like a 1, 2, 3, 4, 5 is the one of the very few conditions where you can have an impulsive movement. Let's go for submicro with overlapping waves. You can see these waves are clearly overlapping. This high is going into this low's range. That's overlapping. This is typically a corrective structure, but the one condition where it's impulsive still is the ending fifth wave diagonal. It's the fifth wave overlapping, and you'll tend to get some really bullish behavior after a fifth wave diagonal. So don't be overly surprised if we see just a massive spike at the beginning of next week into this range over, maybe a 7-day process. Let me just do one last thing. We don't know if this low has been confirmed yet, but we're talking about, 2 weeks of sideways to up. Sideways to up is the short term, but overall the long term is sideways to down. So hopefully that makes some sense to you. But do take my free Elevate Fibonacci Masterclass. It will just give you a level of skill that most people don't have to read the markets and just start practicing day in, day out. Just one little bit at a time, reading. Can you spot 5-wave sequences and 3-wave corrections? That'll make more sense once you read the masterclass. So like, subscribe, hit the bell notification if you like today's content. Let's finish off on a quote. Let's go with Mr. MJ. Chapter 1. I like this quote. It's one of my favorites. Here we go. In fact, no. Let's go for chapter 2. I'm going to go for this one because someone asked a great question in my community, and I don't know if I answered it very well, so I'm going to answer it here. The quote itself is Warren Buffett. Rule number 1, never lose money. And rule number 2, never forget rule number 1. But the question was, Jigay, how can you not lose money? Because that's the whole thing, right? It's probabilities, never certainties. So you have to risk to find out if you're right or not. So the rule is maximize the odds in your favor to have a really strong risk management. So you have acceptable capital exposure. You can only afford what you can risk, only what you can afford to lose, so to speak. But even more sophisticated than that, have a strategy, have a trade plan. So you're increasing the odds to win and decreasing the odds of losing. So when you're playing tennis, rule number 1 is never lose. Rule number 2 is never forget rule number 1. But you can't guarantee not losing a point or a set or a game, etc., etc. What you can do is practice your game, your forehands, your backhands, your net shots, and so on and so forth, to maximize the odds of winning. So when it's the quote, how I read the quote is never lose money, is don't be reckless. Learn extra information to get the odds in your favor. Knowing that the trend is your friend, where you should ride it till its end until it reaches its bend. All right, what is the trend? Is it up or is it down? Okay, if it's up and you're trading down, like you're short in the market, well, then the odds are against you. If the trend is up and you're trading up, well, the odds are in your favor. If you're trading at the beginning of a 5-wave sequence, well, the trend is in your favor. So what I was really referring to when I quote that one, the way I interpret never lose money is, okay, losing money is the cost of doing business when you're speculating on the markets. It just is what it is. However, you can reduce the chances of losing by maximizing the odds. So what I love to use is three major things, but it's simple. Keep it really simple. One is pattern on 2 degrees. So I'm talking about Elliott waves. Take the masterclass. It will cover the high-level basics with you, and it will give you an edge on the market. So it's pattern, position of the market. Fibonacci price ratios. Each wave has a relationship to another wave, and as the market is dynamically unfolding, we can actually interpret the crowd psychology of what's highly probable to happen next. So we've got pattern and price. And then the third one is combine that with a momentum indicator that really marries up with the rhythm of the market, the momentum of the market. And once you can kind of get the momentum of the market combined with pattern and price, all of a sudden you got a massive edge on the market. So rule number 1 It's like never lose money. How I really interpret that is reduce the probability of you losing and maximize the odds of you winning. And then rule number 2 is never forget your trade plan. Never forget to do the basics consistently. Don't gamble. Make it objective, make it mechanical, make it high probability where possible. If you can do that consistently over a long period of time, not just 1 month or 3 months, we're talking about 1 year, 3 years, we're talking about 5 years, we're talking about 10 years, like look at the long-term view. So rule number 1, never lose money. And rule number 2, don't forget rule number 1. Take the masterclass, like, subscribe, hit the bell notification. I appreciate you, and I will see you very soon.